We talk about sports, we talk about movies, and we talk about music. And to an era in rock and roll, the passing of Ozzy Osbourne, our show named appropriately for this market, Crazy Train. That's what we're going to talk about today. There's some crazy moves in a few different sectors. We got to deal with Japan. How good is that for the U.S. automakers? We'll examine that. Some earnings, Texas Instrument taking a hit, taking some other chips down with it. New guest at 8:35, Paul Dietrich, Wedbush Securities. He's chief investment strategist. He's going to go long term, give us that long term perspective on the markets. It's midweek on pre-market prep, folks. Let's get fired up.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, right back up, all-time high. We matched it in the pre-market, up 23.5 handles, 63.70 the quarter. Qs doing what the Qs do. They're up over $1. IWM participating too, trying to clear that 225 level. How's the buck? The buck is flat, 97.20. Give it back those gains from last week. TLT taking a breather, down 25 cents at 86.27. Crude peeling back, but down 79 cents, 74.56. GLD pulling back, trying to get near all-time high, down $1.40, 314.70. Who says a catch-up trade doesn't work? Silver, SLV, trying to get in the 36 handle, up a couple pennies, 35.74. Bitcoin futures, quiet. Can you say consolidation in Bitcoin? Down $785 futures at 118,720. Let's bring on Triple D on this Wednesday. And Dennis, we already made our tribute to Ozzy Osbourne, a rock and roll great.
Awesome. Loved Ozzy Osbourne. Mama, I'm coming home. You know, the guy was just awesome. Loved the music. They don't make music like that anymore. So Ozzy, we already miss you. Rip Ozzy. This market is going off the rails on a crazy train, though, because there are so many squeezes happening here. We're going to get to the Japan deal, but I just want to point out, and then we'll come back to the short squeeze trade, but there was a pile of them yesterday. Kohl's was obviously one that ignited other ones. We were trading PLC live in the STN room. That one went as well. But there was so many this morning. We got GoPro trading up 45%. Rocket hit 19 last night before giving all of it back. We got Krispy Kreme donuts up 32%. We got Beyond Meat up 16%. The short squeeze train continues here, Joel. I don't know. This never lasts long. It's often a sign of a market top, and then we get a Japan deal. So I don't think a market's topping anytime soon.
No. Let's segue right into that. It's a good deal. Good deal for Japan. Good deal for Japanese stocks. We'll go into the individual stocks in just a second. TLT, or excuse me, EWJ trading up above.
Let's get some color from the Brentster on this Japan deal.
Good morning.
Morning,
so we have a reciprocal tariff of 15%. That is down from the initial 25%. Trump said that Japan will invest at my direction. Trump, I'm speaking like I'm Trump, $550 billion will open the country to trade, including cars. They will maintain a 50% tariff on steel. There also will be a joint venture with Japan in Alaska on liquefied natural gas. That's kind of interesting. Right after we got all this news on the Japan trade deal, the Japan Prime Minister and the Bank of Japan's deputy governor were out with some comments on the general economy in Japan, and Japan is like uncertain right now. So just something to note as we are getting this trade deal from the deputy governor of the Bank of Japan, said Japan economic growth will slow with temporary sluggish underlying inflation. Not the greatest thing when you're talking about stagflation, especially on the heels of this trade deal here.
So it's a big deal. EWJ obviously trading up substantially, but look at Toyota. Toyota up 12.7%. Look at Honda up 11.02%. Sony also trading higher here, but let's focus on TM, Joel. This is a huge mover, up 12.74%. What is interesting to me is that we have tariffs going to land for Toyota, sitting down at 15%. Yet for the big three in North America, because a lot of those auto parts coming from Canada, we're up over 25% here still. Apparently, I was reading on social media, the big three are not pleased. Make America great again sounds more like make Japan great again here. Thoughts as Toyota gets a sweetheart deal. And here's GM, Ford, and Chrysler talking about GM yesterday, talking about losing $4 to $5 billion from tariffs. Yet Toyota's only going to be 15%. What's up?
Wow. What's up is the market's taking this news and running with it. I just have to go with like my natural instincts here. And if you had a target of 190, 165, well, there it is. There it is for you, 196. What's interesting here is it just been, it had the big gap up. And it's tight. It's between 190 and 192. I mean, that's your 4 a.m. trading. So you buying it off the hop, you wouldn't want to see it under 190. And if you're shorting it off the hop, you wouldn't want to see it over 192. I mean, that's where the volume has been. That's where it's traded. So I'll just take my cues from the market on that. Far off the all-time high, 200 is a psychological number. That was your high, just over 200 back at the end of 2024. So you got to do. Is this going to help Toyota immediately next quarter? Next thing,
Yes.
Yeah, maybe.
Yes.
Yeah.
Yes, it is. It's definitely going to help them.
$1 billion.
And their tariffs are less than GM, Ford, and Chrysler are paying coming in. GM just talked, like this is why I want to read it. GM just said they could lose $4 to $5 billion from tariffs this year. And then after the day after doing that, the same day, he gives Toyota 15%. I don't know what he's doing. Like if I was working at the big three right now, saying, here we are, like obviously struggling here with tariffs, I'd be like, what the hell? Your North American automakers are being tariffed more than your Japanese automaker. What's up? That's what I'd be asking Trump. So that's absolutely ridiculous, in my opinion.
Speaking no to
from
Michigan.
North America, speaking from Canada, US, that's absolutely ridiculous.
Oh, yeah.
Henry Ford rolling over in his grave. Make America great again is make Japan great again. So I know it'll tick some of the mega people off, but I wonder what the mega people think about this. That's just, I think, terrible for North America that Japan gets a sweetheart deal. Markets love it, though. Markets go higher. That's it. So nothing more to be said there on that. And General Motors, give us some technicals to General Motors because it got hammered.
Got hit yesterday.
Hammered because they're talking about $4 to $5 billion worth of losses from tariffs.
GM, let's see if we can hold yesterday's low. I mean, that's important. Decent support at 48. They just came out with their selling shoes off the open. I think really now you're the battle of the 50-day. Can you establish a bid over 50, right? Yesterday's low in GM is 48.87. So bulls really need to step up here. Trading up 70 cents here in the pre-market. But GM, I mean, if we can have program and algo, seems like good earnings, bad earnings, mixed earnings, raised dividend, buyback. They like to hit the stock off earnings. Take a look at Ford. Ford consolidating here just over the $11 level, and Stellantis is getting a little pop too, but that's really the orphan of the group. We just don't cover Stellantis that much, but there you go. There's the price action in the autos, and
there's rumors today also, before we move on, is that there's going to be a European deal too. I'm not sure that is the case. Brent Street had some color there too, because last night after we got the Japan deal, it was also hinted that there's going to be a European deal coming in the next day or two. Wall Street Journal not believing that?
Actually, it was Bloomberg, and they were just kind of like they were just kind of playing. I told you Wall Street Journal, so my bad earlier. They were kind of just like playing tough. Like the EU plans to quickly hit the US with 30% tariffs on 100 billion of goods, and they're going to add another like 50 billion in goods to that list. So the positioning last night, at least from Bloomberg, was that EU wants to play tough. But is this all just, art of the deal type bargaining?
Probably.
Probably. Yeah, exactly. Yep.
Yeah, probably art of the deal stuff too. It's all art of the deal.
It's all art of the deal.
So anyways, tariffs land much lower for Japan, 15. We're going to obviously see lots of deals coming in the 10, 15 area, and the market can handle that. So, that's the good thing for the market. Hard to be bearish. Like, got more deals coming, I still struggle very much to find the bear thesis in the immediate future. Even though we had some Momo trades coming off and it looked like, oh, maybe it's going to tire. The money just rotates into value. The money just rotates into something else. Rotation keeps us afloat. And today, money is rotating into the big nuclear names here, talking the CEGs and the VSTs and the TLNs. And people on Trib are saying, oh, it's because of GE Vernova. That is not the case.
That's real quick. And I'm sorry to interrupt you. What about people always ask me about the market breadth, the breadth of the market, the breadth.
Okay.
I mean, money just, if it comes out of here, it goes here. I mean, how many times a day do you look at the market breadth? How many times a week do you look at the market breadth?
I look at it quite a bit, but a lot of people don't.
Okay.
So that's what we were just saying. I just made that argument was that we've come from growth to value. The market rotates. This is not like, even though the Momo names were getting hit, and a lot of people on social media were like, oh, my Momo names are getting hit. The market wasn't getting hit. The market wasn't. So, we've got rotation keeping us up. But, just going back to what I was talking about. So CEG, VST, TLN. We've got GE Vernova here that reported earnings, but that's not the catalyst for CEG, VST, TLN. Brentster, you've got the catalyst here. We were trading it live in the STN room last night, and it's this energy deal.
Yeah, there is a group called PJM Energy. They control energy. They provide energy in Pennsylvania, Chicago, Ohio, Maryland, Virginia, Jersey, a whole big area of New England and the Midwest. They had their grid capacity auction last night. It was the highest on record, 329.17 per megawatt day. And we saw VST, we saw CEG, we saw Talent Energy, we saw NRG all moving right when this got announced. We were doing some digging. Like GEV didn't even really move on its earnings a ton. The stock had already moved a bunch on this capacity utilization auction. And, we're getting this space clumped together, these energy names that are more like utility names, getting clumped together with, like your Aklos and your Camicos and your SMRs of the world. And they're a little different. Dennis, do you know the difference between like a VST and like an Aklo?
You got the big majors here because this is more of a deal for those big majors. So we group them separately. So when I'm grouping them, Brent, I've got TLN, CEG, and VST, NRG, and GE Vernova. And then you have this speculative bubble happening over with Oklo, NNE, SMR, which is a different trade. Oklo doesn't even have revenue. So it's a different type of trade. It's like a future nuclear trade, but it's, a different type of trade. Even though we're still talking energy and nuclear, it's a different type of trade. These are the majors that we're talking with: the CEG, the TLN, the VST, the NRG, and we've got GEV in there too, which reported earnings, which we'll get to in a second. But, to your point here, lots of people on social media saying, oh, GEV is, moving the whole group here this morning. That's not the case. All of these other stocks were already up last night before the GEV earnings, and GEV was barely up. So it was this deal that you're talking about, which you said is an annual deal as well, correct? So put it on your calendars.
Yeah, as far as I was able to figure out, it happens like at the end of July every year. Yes.
Yeah. So big moves here. We'll get our technical analyst here, Joel, just give us some thoughts.
One fundamental thing, Brent. What was the increase in the rates? I heard you give the rates.
It was almost it was almost, so the rate was about $329 megawatt per day. That's how they call it. And last year that same auction was around $260. So So, long story short, energy prices are going up for households
So
and for producers.
I mean, a little light bulb goes up,
Okay.
above my head here,
Yeah.
and I just think that the potential impact on inflation, rapid increases in energy
That's
prices
that's a great
are
thought.
horrible for transportation, manufacturing, heating and cooling, leading to higher prices for a bunch of goods and services. I I mean, it's good. It's good for these companies, but
Mhm.
I don't think it's good for the inflation outlook.
Well, there's so many things that are concerning for inflation that are coming down the pipeline,
Who
including tariffs.
cares?
I mean, but this market is all about what is happening now. This market is all about what have you done for me lately. This market is all about immediate gratification. It doesn't care about what's going to happen in the fourth quarter. It cares about now. I mean, the short squeeze stocks, which we could probably go to again here right now, it's probably a good
Yeah.
segue into there,
Yep.
tells you what this market thinks about, inflation. It doesn't give a crap about it. It gives a crap about making money right now. And right now, we've got short squeeze central happening all over the place. The move in coals was nothing short of unbelievable yesterday. In the pre-market, this stock, and you can see it on your charts there, and I think some of this happened at the open as well, went
Yes.
from $11 to $21. It felt like in a heartbeat. It was just skipping handles.
I saw
And I'm
it.
like, holy crap. And then we were talking about, like, what else could go? We were talking in the STN room. I'm like, well, Place is sitting there on the short list right beside Kohl's. So if we went to our Market Watch short list, they've got a nice list there. Literally, Kohl's sitting there with 49.31. Place is sitting 49.95. So it was logical that one was going to go. I know a bunch of us in the STN room bought that down in the low fives, and that obviously closed up, at $6.94. So that was a great one there too. So there's some money to be made trading this stuff, just anticipatory trading, saying it's going to spread. So when you see, obviously it started with this open, door, it's kind of moved into some other things, but now it's spread throughout retail. So, we had big moves yesterday. This morning, we're getting moves, so we were saying in GoPro, which has even been higher, Joel. It's off the highs, but, GoPro got to what this morning? Bring that one up.
Camera on a stick.
It's up 50% still, but it was up even more.
It traded over $4, or not over $4, over 229 for GoPro.
Yeah, so we're about 25 cents off the highs, but was trading even higher. Probably on Robinhood the night before was trading even higher. Beyond Meat, another one that's on the list. I mean, we just got to look at these lists. I mean, and we can show these lists here too. At Brentster, if you want to show that list in the background, it would be probably a good time to do it. You could go to the Market Watch list, or the one I like to use is highshortinterest.com. Both of these lists, retail traders go to, and they were just grabbing random stocks off this list. Like literally, I'd say a quarter of this list was up over 10% yesterday. So, I mean, just, anticipating that's probably going to spread can make you some money on these trades. So, and we did well as well. So this is the one with highshortinterest.com. WOLF was right at the top of it. It lifted a little bit yesterday. It's up 7% here this morning. But just even going through the top ones here, AIRS, it's up 7% here this morning. B. Riley hasn't really moved. So they're not moving them all, but the retail names they really gravitated to. Kohl's, Hertz, I have a position in Hertz. That one hasn't done anything yet. PLCE moved yesterday. Beyond Meat's moving this morning. So I've taken a position in some of these names, but this is just with the market that we're in right now. So, it's moving, and just like it's like this bubble of, like speculative bubble just continues to move from one place to another. So Momo's loss was all these short, these stocks that have been really beaten up gains yesterday. So it's just interesting to watch the capital flow through. And it's algorithmic driven here too. Don't kid yourself.
Sure.
Once they start moving, those algos get on board here, and you get these crazy moves. Like that Kohl's isn't all retail. A lot of that's probably algorithmic driven as well. But unbelievable moves. DNUT, RKT. Look at this one last night, Joel. It started moving yesterday. That's your rocket. This was one that you were looking to invest in. Well, hell, you could have been long gone, make a 40% gain on that thing last night. Bring up RKT here.
I see
you can see it got up to almost $20 last night, didn't it?
Yeah, it got into the 19 handle.
Unbelievable move.
Yeah, that I guess I shouldn't worry about interest rates going down. That's kind of what had kept me out of that trade or that investment. 1979 was your pre-market high. But one question here: Do you think some of that buying off the open, where it surged over 21, do you think that was like, okay, you're out of your position. You're out of your short. You don't have any money left in your account. Do you think that might have been because
No,
that
short
was
squeezing in there. It wasn't enough volume. I don't think so.
okay?
I think it's just speculative. And what do you do? So what do you do when you're in these trades randomly like Kohl's? It's been a dog forever and it pops 100% in 10 minutes. What do? You ring the register. You sell into this stuff because these are gifts from the trading gods. A lot of these stocks, are dogs and will continue to be dogs. Some of them might be okay, but I think it's a ring the register opportunity. So when you get these 20, 30, 50% gains in a matter of minutes, you take the money and run. That's the way I would trade them. So unbelievable the move here. Kohl's was just mind-boggling.
I
Here's a stock
know.
like it didn't get taken over. No, it didn't get taken
Who
over. We
wants
just got short
Kohl's?
squeeze central happening, and it was one of the top stocks on the list.
Do you want to see something? Do you want to see something really interesting? There could be the leading SS indicator, and I'm not saying anything. The leader of the pack.
It's still going down. Yeah, but they moved on to bigger and better things. Sorry, Mr. Eric Johnson or Jackson. Jackson, I think.
Eric Jackson.
Yeah, so who obviously was, coordinating and talking and let's everybody get this thing going. Let's go, because that's what this market allows now with the deregulation. Just everybody can get on board. Oh, get it going. LFG, let's go. Well, okay, so it went from 1 to 5. It's pulled back down. So the market's moved on to other things, bag holders. These things almost always end badly. It's just a matter of when. Could open go again? Sure, it could go again. Maybe it does go again. Maybe it takes off and takes off. This was one of the catalysts, though. The stock went to $1 to $5, and it felt like 3 days. Well, it was 4 days. So, but I mean, this is what we're in. We're in speculative bubble. Back to 2020 here again. Japan deals, European deals coming, markets at all-time highs. I mean, this is what happens when you get speculation running rampant.
Yeah, and you know what? In earnings season so far has been, okay. Not, nothing, nothing great, nothing bad. Definitely have some stocks taking some hits. And should we talk about one of those stocks? It's deep in the red here. That would be Texas Instruments. I believe they reported after the close, and Texas Instruments, they beat 141, 133, beat on sales, 4.44 versus 4.329. Guidance, well, you could drive a truck to that, 136 to 160 versus 148. Sales also just kind of gaming it here stuff, but Texas Instruments traded deep in the red. Is it going to pull an NXPI?
Well, it's pulling down NXPI. So Texas Instruments has put, we had a chip wreck going on last night. It's come back a little bit, some of these stocks, because of the Japan deal, so they bounced back. But so many of these chip stocks were trading down on NXPI the day before. And then NXPI bounced it back. Now NXPI is down back at the lows again because of Texas Instruments. So I don't know. I think NXPI probably gets a dip bot a little bit here as well. But, you could go to ADI. You can go to ON, you can go to MCHP, all, direct peers here, all significantly lower, down 6.32%, MCHP, ON trading down 4.72% here, ADI trading down 5.01%, NXPI down 3.5%. How they already had their earnings, but they hit them down there again too. You did see last night AMD and NVIDIA and all of them trading down with this as well, but those have bounced back. Simply because we've got a bounce in the overall market, and they're not as directly related. So they've seen a little bit of a bounce back here too. But the moves are incredible here. The overnight moves too. This is a big move for Texas Instruments. Like some people would say it's a buying opportunity, but we've seen the story in the past. When they sell them off, on earnings, and sometimes they just don't bounce back. But the peers plays do bounce back. It seems like a little bit better. So if anything, I'd be looking more to the peers as opposed to the leader.
Shallow auto, because I was the numbers that I just read you in the guidance wasn't that, but it must be the comment. The shallow auto recovery cites geopolitical risks and tariff impact on supply chains. So that is what the algos chose to focus on. Just looking at these stocks that are moving in sympathy with it. Dennis said MCHP. That is trading down well off the pre-market low. On is down 335. That one never really participated like
It
the other
bounced back
one.
yesterday with NXPI. So,
Okay.
fool me like again, because we saw bounces on some of these names yesterday with similar news, I gotta think that there could be bounces here again on these names. So I don't know if I'd necessarily just be selling down 4 or 5% because he did that yesterday last. We're doing the same thing again today. So I would look at yesterday's low on ON. I'd look at yesterday's low on NXPI. I'd look at yesterday's low on MCHP, which we are actually breaching on MCHP. But just keep that stuff in mind. Also, the Brandster pointing out STM is another one, which is which is an ADR, obviously.
Yep.
ST Microelectronics, it's trading down 4.37%. So that one gets priced a little bit like where it is because it's an ADR and it's already trading actively in the other market. But that's where we're at here. Is like yesterday, stuff were bouncing. Some of these peers were bouncing. So why don't they do it again today?
I would just say for people trying to buy the dip here, and I just looked at this NXPI after trading down way down here, under 214, even lower than that, trading down to 212. That was last night. Yesterday's action is when I want to go back to, going back a little bit farther when it traded under 214. It came all the way back to scratch. It came all the way back and cleared the closing price from Monday and then fell apart again. So, just get that mark is important. When I don't know if Texas Instrument can get back to scratch 2163, but when you're trying to buy the dip on these kind of issues, you can look at two things. You can look at the bottom of the previous day's range, and then you can also look at the close. So that close on Tuesday, NXPI proved to be a good stock. I'm going to go off script here and talk about stocks that rebounded. Sarepta caught a bid yesterday, Dennis.
Well, again, I think it was voluntarily removed only in the U.S., and I think they actually viewed that as a positive, that it was only in the U.S. We also, H.C. Wainwright saying it was voluntarily withdrawn because the FDA was going to make them remove it. So they kind of did it, just to get ahead of the FDA. So it wasn't like full. But does that mean, the revenue is going to end up, being gone here? H.C. Wainwright thinks so. They still reiterate the price target of 0. So it's hard. I mean, stuff doesn't go straight to 0 either. It doesn't go straight down, but the story is absolutely broken. It's just, we got the gift of getting out of this stock live in the STN room back when they had the ridiculous pop from 19 to 28 or 29 on that restructuring. It was up 60%, which was, I quoted in the STN and said, this is one of the dumbest rallies I've ever seen. I'm selling into it. So, and literally one day later proven to be correct. So I don't think this is like the comeback story. I think if you're coming in as a 13, it's tough. We had 3 people die from the drug. I mean, there's, the drugs getting pulled from the shelves. They have, really no other sources of revenue here. I mean, this is just, a really broken story here. And I don't know if it can be fixed.
I'm just going to call it because they were, some folks were asking about it in the STN room midday. And, sometimes on this, like with all the news and then there's no news, you can go to the technicals here. And I'll just point out 1281 low on the 18th, Monday's low 1260. You undercut that low on Thursday on yesterday's session, on Tuesday's session. Some people said, the old, undercut the low and rally trick supported by 2 other lows. The other thing that I'll point out is that, man, you might have some seller exhaustion here. You had big volume on the day. You had 14 million here, right? 14.5 million when it started to get hit, and then going back. So you had 78 million on Friday. People just, I gotta get out of this. And then the stragglers on Monday, volume drops by 50 million. And then yesterday. So what you're seeing to me is just a little bit of seller exhaustion.
That's what it is.
Yeah.
And you get a little relief pop there when the seller exhaustion. But, the next, bad headline that comes and the thing gaps down again. It's been like, bad headline, bang. Bad headline, bang. And just doesn't bounce back. It's done 3-4 times here already. 5 times, 6 times. If you look at the chart. Horrible story. And we feel bad for all those people who needed that drug. So it's just not a good story.
Okay, 8:30 news dump. Not really seeing too much here. All the numbers light up because all the algos get ready for for the news, and not too much. Just hanging out near that all-time high. We just backed off slightly. When I looked at the SPOOs real early this morning, and they were up quite a bit, and then I did see the headline about Europe starting to talk tough, like throwing like 30 billion on US goods or something. I thought we might pull back a little bit, but
They aren't scared. So when when we have no deal, when we have worries, tariffs are increasing, they don't go down, then we get deals, we go up. I mean, the bulls are in complete control. We're not selling off on bad news, and
nope.
we're rallying on good news. So why fight the tape? We can all want to be bearish. We can all say fundamentally, yeah, none of this makes sense. And maybe it doesn't, but who cares? The market is not connected always with the economy. The market's not always connected with fundamentals. We know this. The market does its own thing. And right now, bulls remain in complete control. We just made new all-time highs. If you're shorting stocks, when you're making new all-time highs, you're doing it wrong. Kick them when they're down. When shorting stocks, you're kicking them when they're down, not when they're at all-time highs. That's a recipe to lose a lot of money.
All right.
So many, movers here. Just we obviously went through short squeeze stocks. We talked a lot of other stories here this morning here too. We're going to get to ratings there after our guest as well. But we are in earnings season, and we get a whole pile of earnings here tonight. So we're going to get Tesla, we're going to get Google, we're going to get Intel tomorrow, and also we're going to get IBM here tonight as well. So a big plethora of major tech reports here tonight. Let's start with the Googs, because Google has, Joel, had a serious run up into the report. I think they'll be fine. I do think search is still under attack, the core business, which is why I don't have this in my long-term portfolio. But hey, a rising tide lifts all ships, and the markets are making new highs. Give us your technical thoughts here on Google. I'll go grab that expected move.
Yeah, I mean, I just think they're gonna have to blow it away. I mean, it's moved up. Everyone was kind of skeptical, caught a bid at the 50-day moving average back near the end of July, and just had a nice move. And not back at all-time highs like the market, but I don't know, high expectations. I think on this one, I would be more apt to sell the top of the expected move than, try and pick a bottom. You're going to have some people that
$11.
11, really?
$11. So that would bring us down to about $1.81, or on the upside, it would bring us well over 200. So that's, I don't know. I'm torn. Like, this is like a coin flip here. Do they have problems with search? Do they have a lot of other cool things going on? Do they have some stories? Yeah, for sure. The Waymo story is cool. There's lots going on still at Google. Lots of AI, lots of innovation still at Google. That's why I've compared Apple to Google before, and Google's P is a hell of a lot less. But Apple's core business isn't under attack, and that's why I'm scared of Google, because their core business, the search, is under attack from all the chatbots. But when you look at innovation-wise, Google's got some stuff coming, man. So innovation's been a lot better at Google than it has at Apple.
If you've been waiting for a gap fill from February 4th, I think that was like on AI related and ChatGPT and competition. That had a $10 gap down day on February 5th, and it continued, kind of closed near that area. But 204.26, that fills the gap. Maybe get out there at 204.25. That would be above the expected move too. So high bar, I think this. I don't know how high bar is where the earnings. I don't think they adjust their earnings. But big run up into the print. We'll see if it can continue. For Google, do we want to go
Tesla quickly, and then we'll grab our guest.
Okay. All right.
Tesla trading down here in the pre-market here has run up a little bit. This is going to be a very interesting report, because the numbers are going to suck. It's just what they do. But there's going to be lots of talk in the conference call, probably about how great robotaxi's going. We're going to expand, and we're going to do things. So it wouldn't surprise me if you get the dump and then the pump back by Elon Musk. So that's kind of how I'm going to approach it. I'm going to think that the numbers are not going to be good. The stock probably initially sells off on weaker numbers, and then I think eventually the buy the dip crowd just comes in. I think Musk probably talks it up on the call with everything coming, and the stock gets a rebound. That's what I think is going to happen. I don't have a crystal ball, but an anticipatory trader in me is going to look to play it that way.
Do you have the expected move handy there for?
Yeah, let me just quickly grab it. Which I did not. It'll take me 2 seconds. Give me a
Okay.
technical level.
Yeah,
here,
yeah.
Joel.
Let me go. Let me get.
It is $13.24, $24.
$24. So that would take you up towards 356, 357.
Yeah, getting up near the highs. And then on the
Yeah.
lower side, you're getting down near the 300 psychological support.
I kind of
Dip
like
and
it.
rip. What do you think's going to happen with Tesla?
I kind of like it because you have some confluence with the 2 daily highs from June 23rd and June 24th, 57, 54, and 56 and a quarter. So that fits in nicely with the upside. That was the robotaxi rollout, folks. And that was so good, but then wasn't so good. And then coming on the downside, the lows are jagged here. I can't 300. Yep, 300 was your low on July 10th. Also, with that expected move, option traders, get active, trying to cover positions against their calls or their puts, trying to lock in some gains and stuff. So we'll see what kind of action we get in Tesla. But you're right. I mean, I think everyone's expecting not such a good report, but then
And that sets the bar low again. Even though the stock has not, like the stock has actually run up a little bit here into the report, which is the strategy that we often play, it's still bar is actually quite low. So, if they say anything okay, like, oh, we're seeing a return to demand or anything like that, I think that actual numbers are not going to be great, but I think it's going to be the talk up on the conference call. And even if the numbers aren't coming back, he's going to talk it up. That's what he does. He talks up his stock. He is, the pumper of pumpers of his own stock. So, and if you're a shareholder, you got to like that because, it was priced higher. IBM, Big Blue going to report. Still waiting on our guest. Big Blue going to report here too, which is your sneaky AI play, which has really had a run as well. So the bar, really is kind of high here too. Although recently kind of, slowed down a bit. I think they'll do okay. Expected move on here is $18. That would bring us right to 300, which is interesting. On lower end, obviously, it brings us down to a 264 level. Thoughts on IBM?
All right, let's take a look at Beamer. Kind of quiet, a stock that we don't talk about a ton. Trading up $2 in the pre-market, 283.90. Support better defined than resistance. You had the bulls hanging out at 280, 281. So you're not too far away from there. On the upside, I think the first thing, if you did get a rally, taking back about a 15-point move, but that's kind of close to the 87.5 to me says, hey, this was just a little pullback. We're getting above the 50% retracement. Let's go back to all-time highs. Another factor that you can use on the downside we've seen come into play is the 50-day moving average here. That comes in at 276.06. So there's your setup for itsy bitsy machinery.
So we got our guest here ready in the background. So play that intro. We're going to go grab our special guest.
Paul, you got a nice smile on your face there. How you doing? You
Good. Sorry,
prep show?
I was on another link somehow and it wasn't coming on.
Technology. So tell us about your role at Wedbush Securities.
As the chief investment strategist, I kind of, most of the analysts at most firms are trying to tell you what's happening in the market today or in the short term. One of the things that I've tried to do over the years is to look at long-term trends in the market. And I find that not enough people write about it, not enough people talk about it. And when I'm on, CNBC or Fox Business News or Bloomberg, I try to talk about where we're going in the long term because, unless you're a day trader, most financial advisors, most wealth managers they're investing for the long term for their clients. And, it's the old thing. If you don't know where you're going, any road will lead you there. And I just think we don't spend as much time as we should looking at long-term macroeconomic trends, and that's what I try to look at, and that's what I write about.
So the big question for you, Paul, is the economy slowing down?
Yes, without a doubt, and it's slowing faster than I think you would realize just by reading the newspapers. And one of the ways you can tell is to look at the leading economic indicators. We have leading economic indicators, we have kind of current economic indicators, and we have lagging economic indicators. And most of the stuff that you get, from earnings, GDP, all that stuff, those are lagging economic indicators. And so they're telling you what's already happened. They're not telling you what's going to happen. And it's the leading economic indicators you should be looking at. And I'm telling you the conference board, which kind of tracks the index of leading economic indicators 2 days ago, or Monday, I guess it came out. And boy, it's just dropping like a stone, all the 10, 11 leading economic indicators. And it's starting to get worrisome. We haven't seen this kind of a drop since early 2008 and early 2001. We know what happened during those two periods.
So if bull markets are an indication of strong long-term growth and bear markets are a period of contraction, should have caused, long-term, short-term, medium-term investors, should we be cautious here?
Yes. You can't do better than following, say, Warren Buffett's advice. I mean, he's probably the best investor in the United States, and he's been selling a lot of his favorite stocks. I mean, he loves Apple, and he's been selling it. He's put together a $357 billion cash hoard, and at his recent big convention or annual meeting in Omaha, Nebraska, people asked him about what are you going to do with all that cash, and he said, "Well, I'm probably going to buy back all the stocks that I sold, but hopefully at a big discount, and I'm just going to pocket the difference." And he always says, "Remember what your grandmother told you when you were a little boy. Buy low, sell high." And we're in a market right now, a stock market that is, by almost every measurement that analysts like myself look at, this is the highest, most overvalued stock market in the history of the United States. If you look at, say, the Cape Shiller PE index, which is kind of a 10-year average of price earnings ratios, we're way higher than we were in 1929, right before the Depression. And we're higher than at any other point in history. In fact, 2001 and 2002, the dot-com recession, right before that, it was higher, but now we're higher. You look at the Buffett indicator, which is what Warren Buffett thinks is he invented it. It basically takes the market cap of the entire stock market and divides it by GDP, and it's never been higher in history for over 100 years. And so, again, if you remember what your grandmother told you, buy low, sell high, people should, you don't want to be buying in this market.
Paul, when do you think the market actually starts to reconnect with those fundamentals you're talking about? Because, I'm with you here. I can see a lot of things, obviously tariff uncertainty here in the second half. GM just warned about losing $4 to $5 billion because of tariffs. There's a lot of things to worry about here, yet the market continues to just ride this wave higher and ignores all this, climb this wall of worry. When do you actually think? Is it in the second, third quarter? Is it in the fourth quarter? When do you think the market starts to take note that, hey, maybe the economy is not doing as good as the market thinks it's doing?
You have asked the best question, and I mean, really, this is the question. But we've been here before, and if you remember, they called it the dot-com bubble for a reason. The market just kept going up and up and up in 2001 before the S&P went down 49% and the NASDAQ went down, I think it was 74%. And the same thing happened in the run up to the 2008 during the mortgage-backed security crisis and the Great Recession. And people were just plowing into the market. And why wouldn't they? People were lending on your home 125%. You didn't even have to have a job. What could go wrong with that? And so you got 2008, the same thing happened. And so I was going back and I was saying, what were the triggers that happened where people just got out of the bubbles? And, you look at 2001, and really there was no trigger. Cisco, which was the backbone of the internet, and this was called the internet bubble, the dot-com bubble, it just started going down. And it, went down 75%. And then the rest of the market just started following. In 2008, all of a sudden overnight you had Bear Stearns and Lehman Brothers, kind of collapsed and no one saw it coming. It was just, the next day people were packing up their desks and leaving. And so the same thing could happen now. And I think there are a number of things out there. I really think tariffs are, people ask, well, I haven't seen my prices go up. And that's because most of the tariffs have been paused. Now, we've been collecting 10% tariffs since April 2nd, Liberation Day, as President Trump calls it. And but 10% tariffs are not 55% that he's supposedly going to start collecting on China. It's not the 20-30% that he's supposedly collecting on others. He just came out with a trade deal with Japan, where at the beginning of this year, tariffs were 1.6%. And now they're going to be 15%. But that's not going to be collected until August. And that's the same way. So people have said, well, I haven't seen the effects on prices at Walmart and Costco and Target yet. And that's right. They haven't been collected really much yet. And so we will. And then they have these, tariffs, 25% on all cars, which they didn't mention with Japan. That's a big thing that Japan exports to the United States is cars and car parts. Now, that's going to be 25%, and then 50% on steel and those sorts of things. And none of those really have hit yet, and they haven't gone through the economy. And it took with President Trump's first tariffs back in his first term, especially for steel, we didn't see the prices. It took a good 4 or 5 months after the tariffs were starting to be collected before we started seeing washers and dryers and all the things that were made out of that steel start to go up in price. And boy, did they.
There's a lag then. So the lag just hasn't caught up yet.
Yeah, and so if they really do start collecting these tariffs after the 90-day pause, next week or the week after in August, it will probably, there's the budget lab at Yale that's talking about that it will probably be November and December before we start seeing that. And we do know that a lot of these big companies like Walmart and Costco and Target, they've been bringing in large amounts of inventory before the tariffs hit. And
Yeah.
so that might have to be worked out too before we start seeing the higher prices. But definitely during the height of the Christmas shopping season, you're going to see everything going up. The CEO of Walmart mentioned that 60% of everything they sell, but almost 90% of everything they sell at Christmas season comes from China, and that should have a 55% tariff on it.
Paul, I mean, with the market at all-time highs here and seemingly no end in sight, the consumer not tapped out yet, inflation not a worry as of yet. Is there anything on your radar here, either sectors or individual issues or hedges that you're currently looking at?
Yeah. I would. There two. You made two really good points. Is that it's true that the consumer is not tapped out yet in terms of spending, but what we are seeing is credit card debt is at the highest point it's ever been. There are also more people are coming up against their limits, and we all know what happens when you hit your credit card limit. And one of the reasons that you're seeing these buy now, pay later at almost all the big stores, all the big box stores have it, is because people are coming up against their credit card limits, and the stores know it, and so they're finding new sources of credit for people who wouldn't normally be able to get it based on their credit rating. And at some point,
where's this happened before? Where's this happened before?
Where have we seen this before? And so this is we're very, very close to them. And then when they go to the stores in December and they want to buy for Christmas, and they're starting to see these 30 and 50% tariffs coming in, and those are taxes that you have to pay, and that means that 30 to 50%, you got to pull back something. Either you're not going to be spending as much, which is going to be a hit to earnings, or it's going to hit the consumer at some point, and it's going to hit retail sales and all of these things. But let me tell you what, this is the thing that people forget about the last two recessions is that the stocks that went up during those recessions, I think are going to be probably okay this time too. And it's not going to be tech. I mean, tech, people forget that the most profitable tech companies in 2001 and in 2008, were Apple, IBM at the time, Cisco, Microsoft. All these companies were phenomenally successful, yet they all went down in value. In 2001 and 2002, Microsoft went down 72%. Apple fell 74%. The most successful tech company in the world at that time was IBM. It went down 53%. But Amazon was making money back in those days, and it went down peak to bottom during the 2001, 2002, 92.5%. That was the time to buy Amazon. It went down 92.5. People were talking about in 2008 that NASDAQ had gone down almost 80%. They were talking about merging it with the New York Stock Exchange, and because so many companies were either being taken over or going bankrupt because most of them didn't have earnings. They had revenues, they didn't have earnings. But you look at the companies that had earnings, like Microsoft and Apple. They have been in business for 20 years before that, back in the 1980s, and they still went down 70%. And so don't think that NVIDIA can't go down that much and still be a great company and still come back when we have another bull market as a great company, just as Apple and all those other companies did. But the companies that went up were McDonald's, Walmart. There was an auto parts company. It's like one of those chains that's in every mall.
Probably O'Reilly, or
yeah,
it wasn't
something
Advanced
like,
Auto Parts. Probably O'Reilly.
It was one of those. Those are the companies that are not going to go down as much, and they're going to do well.
All right, Paul Dietrich, Chief Investment Strategist over there at Wedbush Securities. Paul, this was a lot of fun. You gave us some great statistics here, a good perspective on the markets. Our buy the dippers will not let NVIDIA go down even 5%. So don't bet against us. Buy the dip. No, Paul.
That's what they said of Amazon.
It got ugly. It ended up working out in the end, though. For Amazon, anyways.
Yeah, but you had to go. You can imagine how many people sold out of Amazon when it went down 92.5%.
I'm sure I did too.
All right, thank you so much, Paul. We'll be dialing you up next month for sure.
Great, thank you.
Thanks, Paul.
Bye.
All right. That was a lot of fun. Paul Dietrich here over for Wedbush, giving us a longer term perspective on the markets.
Well, and it's important to have that, like when Warren's not investing, even my long-term account, I'm sitting with a lot of cash too. I've been trading like hell on the short-term account, and it's been doing really well from the long side. But I'm like, what are you investing in here? I was like, really nothing. I'm buying AMD dips. I've been buying a few stocks here, but it's been tough. So, I mean, valuations are just stretched so much, it's got to make sense. Buy good companies at reasonable valuations. We're starting to get to a point where valuations just aren't reasonable anymore. Ratings parade here. We got a couple good ones here.
Okay,
Unity.
let's go.
BTIG downgrading Unity to sell. The big sell word here. The stock's had a hell of a run. This was one we were back in the $18, $20 area. It got up to $38 the other day. It's down here at 33 here this morning, down $1 on the rating. Jake Fuller downgrading from neutral to sell. Price target $25 at BTIG. Does that case hold water here, Joel?
A couple red candles, right? Shots across the bow. I'll just say you don't hear that word very often. You heard it yesterday in Circle, right? And it continued down. I mean, if you could care less about BTIG, you love Unity, then get in there and buy the dip. Maybe not today. See how it reacts today. Another day, I'll put a couple lows in. You're still above the gap area. And a lot of times when you've seen this a lot, your gap and go, $32, protecting the gap. We'll see if that's protected today in Unity. Still way off that all-time high at $210.
The other one I highlighted, I ignored the Sarepta ratings because they're just some of those every day. Guggenheim upgrading Dynatrace. This is for our buddy intern who always loved trading the stock. DT to buy from neutral. $66 price target.
66?
25%. 66, not 666. So 25%. Conservative price targets here, as we've seen some absurd price targets from some ratings. This is not that. 66 probably looking out, where we were 24, 25. We're up over $60 here. So seeing a little bit of upside here for Dynatrace. The stock is trading up 3% here on this rating.
Symbol me on this one.
DT.
Okay. I tried a few different ones.
That's okay. It's not one we talk about a lot.
I would say, I don't know this firm or whatever, but it had a nice rally.
Guggenheim, Guggenheim's been around for years. They're great. Yeah.
Yep. Bumping up against the 50-day. Good so far. Good day in the market. I'm not fading. I'm not fading Guggenheim on this one. I don't mind. Would kind of like to see it, maybe come back down to, I don't know if you're going to get the top of the yesterday's range, but Guggenheim, good call. Good call in there. So 9 o'clock, Brandster. Did you say we had someone new in the chat? Who
We
was
do.
it?
We have Brian R. new in the chat. Welcome to Pre-Market Prep, Brian R.
Yep.
Nice.
Hit us with a like if you liked us, and we are gonna wrap today's show up. Only one number on the board on the S&Ps. I'm sure you can find your own numbers here, but we hit that all-time high a few days ago at 74.25. We are bumping up right against that. Gonna hop at STN. I can't.
Yeah, we're gonna talk all these other stocks.
It
We'll
can't
get
be
into
as
the
wild open
Oscars.
as yesterday. So I think I'm gonna go grab a pillow and take a nap and stuff because there's nothing that can compare with that open from yesterday.
Well, it was a lot of fun. The short squeeze stocks are going here again. GoPro, look at it now. It's up 76% here now. So we're going to go cover this action here because, again, it's just exciting. Right now, we're in short squeeze. This isn't only going to last a day. These things don't last for months. This short squeeze goes, it usually lasts a couple of days, and then they start to peter out. But right now, it's just cycling through again and again. We're going to different stocks. Today's one is GoPro. We talked about this yesterday, actually, too. And I actually was in this thing. I took it from $1.50 to $1.80 last night. Didn't think it was going 244. That's a crazy move. So let's go talk about them.
All right.
Stock Bear Network.
Fired up.